if I ask, what drives you to the idea of wanting to own a business? I mean,
Mhm.
every single person for 19 years says freedom, control, stability, security. Like the answers are always the same. Welcome back to the Daily Coach YouTube channel. Today I have a friend of mine who I was a guest on his show, he says about 1 year ago, which is unbelievable to me. Welcome to the show, Chris Miles of the podcast, The Chris Miles Money Show. Did I say that right?
You sure did. Yep, that's perfect.
So, Chris helps people invest their money in other ways other than franchising. And here on the Daily Coach YouTube channel, we love to talk about franchising because that's my sweet spot. But franchising is only one type of investment, and it's not really passive. I mean, there are franchises that don't require that much time from the owner, but by and large, the vast majority of franchise businesses require time by the owner in order to get them up and going, right? But Chris has a different take on investments that he's here to talk to you about today, because sometimes you have corporate jobs, you have other businesses, and you have money and you're looking for some place to invest it that doesn't require your time. How's that for a setup, Chris?
That's perfect. I like it.
So tell the audience a little bit about what you do, who your clients are, and how you help people.
Yeah, so I'm basically semi-retired. I was able to retire twice now over the last several years. The last time was in 2016.
Retired twice. Wait a second. Wait a second. What does that mean?
That means I screwed up the first time. That's what it means. Yeah, I actually was able to retire when I was 28 years old, doing like business streams of income, things like that. That was only spent a couple hours a week doing, right? But I was able to pay for everything, and so I was at this point where I was like, well, what do I do with my time now? And I started getting into like real estate investing just before the crash, right? But I wasn't doing it in a good way. I started out on a good path, and then I started gambling with it, thinking, well, man, with the way that price is appreciating, I should just buy it. I don't care if the cash flow's horrible. I'll buy it so I can make money on the appreciation. And that was a total gamble. Not to mention, I started a brand new business with some partners where the target market were real estate investors who were also gambling, right? So they weren't even the good real estate investors. So long story short, it was like this perfect storm of craziness that I was out of the rat race and then back in the rat race, and actually eventually got in over $1 million in debt and had to dig back my way back out of that slowly. And that took until about 2016 where I was able to do it again. I was able to get out of the rat race, and then here I am today. Now I work part-time, although the hours have increased as my business keeps growing and booming, and so I've had to hire new people to come in my company. But the primary things I do now in my company is I consult people how to get out of the rat race. So almost like an anti-financial advisor, right? Where I'm not telling them to gamble their money in crappy mutual funds and stocks, which don't really work anyways. They're high risk with mediocre returns. Instead, I'm teaching them how to do other things, which is why you came on my show, right? That's why we talked about franchise as one of those opportunities to get out of the rat race in a different way. And then I also help people with like the whole infinite banking life insurance concept that helps people double dip on their money and make more money off their money too. So that's basically what I do as an active thing, but really I'm mostly passive. I'm very passive in my investments. I've got obviously passive or residual income streams coming through my business too that, whether I'm actively working as a coach or not, I still make money. Yeah.
If someone's just coming to the idea of, I want to, whether they have a corporate job or they're looking at franchising as their basis for like bread and butter, but they want to build passive income that they can rely on, residual passive income, so that they can stop, quote, working and be retired like Chris Miles, where do you tell them to start?
It depends on bandwidth a lot of times, right? It depends on what kind of life they're trying to create. Because like, I had somebody reach out to me the other day, and she's trying to build a side business, but she's working, 30 hours a week at FedEx and full time as a nurse. It's like, well, holy cow, like you're working beyond overtime. And she even said, she's like, honestly, I'm not even building my side business because there's too much there, right? So I'm like, well, we got to get you quit FedEx, like get out of there. So for her bandwidth, she needed to get cash flow freed up or improved so that she could at least quit one of those jobs so then she could focus on that business, right? Funny enough, just by looking at her situation, I said, hey, I'm not going to bring you on as a client because, you can't afford me, but at least not in this stage. But I said, if you do these little tweaks here, stop your stupid 401k and things like that, you'll free up $750 a month, which is halfway of what you need to do to hit your FedEx. So either one, at that point, you either quit and get your side business going fast, or keep working at FedEx, but keep building up some cash savings. I told her build up to like $5,000-$10,000 of cash reserves, then launch the business when she doesn't feel desperate for money, and that'll be able to bridge the gap, and she'll be able to be have that 30 hours a week back in her control again. So it's everybody's in a different position, right? A lot of people come to me. Usually they have tons of cash. They're just like, what do I do with it? And again, if you don't have a lot of time, then you want to look more at the
Very good
passive
problem
side.
to have.
Yeah, exactly. Yeah, if you don't have a lot of bandwidth or time, we look more at the passive side. If you do, like I've had clients I've sent to you, right, where it's like they're like, hey, well, we've got some time. We want to make better returns than just what our money will do passively. Because understand this is that when you try to make passive income, or I call it residual income if it's done through business streams, right? It's you'll always, in my opinion, you can almost always get a better return in the business side of things, like with franchising, than you would on the passive side, like investing in real estate. Because when you invest passively, usually you cut off returns. But when you can put in time and energy, often you can influence and magnify those returns even more. That's why it's possible somebody can make their money back in a franchise within a year or two, right? Where real estate, it might take 3-4 years to make your money back, depending on
It's
what
always
happens.
a trade-off of money for time. I coach people
Always.
on that right up front in my process when I explain exactly what their money buys in a franchise so that they can see when you have a low investment, a home-based business, people think, well, I want to work from home, but I don't want to sell anything. And I'm
Uh-huh.
like, well, those two things don't actually go together because if you're working from home, that means that you're selling at the maximum level, right? Because no
That's
one's going to
right.
find you if you're not out driving that activity. So you're trading a low investment of money to start the business for a high investment of owner time commitment versus like clients of yours that I helped into my laundromat franchise. So
Hmm.
they have apartments that they manage and multifamily homes or whatever that they manage. And we're looking for a business they could put some time into, but not that much time, but that would give them maybe a faster or better return, better cash flow, but also still provide tax advantages like their real estate. And I led him to the laundromat, and it's about 5 hours a week on an ongoing time commitment. That's a big investment of capital to
Yeah,
build the laundromat and put all the equipment in there, but a relatively low investment of owner time commitment. So those two things in franchising are usually inversely related. But the
absolutely.
level of return, to the point you were making, it's not always I would actually argue that if you're the right salesperson who wants to
Hmm.
put in full-time effort into that smaller franchise investment, you
Yeah,
really have more of what I would call unlimited earning potential. Like
that's
think
right.
like a real estate agent. I
Yeah.
mean, you might know an agent that sells 10 homes a year, and I might know an
Uh-huh.
agent that sells 10 homes a month, right?
That's
Well,
right.
what's the difference? The agent, their skill, their tenacity,
That's
right?
right.
So it's not related that way to
Hmm.
the level of investment going in. It's related more to the owner driving that activity.
That's right. It's really human life value driven, right? Human capital driven, or relationship capital driven, and that kind of thing versus just money driven. And I think that's a key thing that people got to understand is that you know yourself more than other people do. Hopefully you have a pretty good understanding of who you are and what you're capable of and what you're not capable of. And that really will determine the path. There's never one size fits all. That's the thing that drives me nuts about the world is that they try to make it seem like hey, this is the path. Well, if that's a path, that's usually because they're selling you something, right? Like if that's always the path, but there's always multiple paths to do it. Like I've got clients where like you mentioned that one, like they actually are in real estate investing, but they wanted to diversify into doing things with with franchises and whatnot, right? But then I get other people who are in the business world. They might be entrepreneurs. And they're saying, "Hey, I need to diversify income outside of my business in case something goes wrong." And I think no matter which direction you're coming from, you always need multiple streams of income, and ideally, at least some of those being passive, right? I'll tell you, I've known active real estate investors that aren't really real estate investors. They're actually just really good. They do real estate investing, like they might do wholesaling or flipping of houses, right? not as a real estate broker, but just they're doing the flipping and stuff. But if you were to churn off their business right now, they would have zero income coming in, right? And they make millions and millions of dollars a year, but they're not free of their business. They're just in a bigger rat race, right? Like it's just a bigger wheel that kicks off a lot more money, but they're still in the rat race. And you want to get out of that. You want to make sure that no matter what happens in your life, you always have income coming in from somewhere. And that's what we look to do. That's why we look at, a lot of times I'd look at not just real estate, like the traditional stuff, because I had a guy that I just talked to in Canada recently, right? And he's like, yeah, I got a property I'm really excited about. I'm in the hole $500 a month. I'm like, that should never be the case. And then I find out he has almost $300,000 of equity in that property. And I said, do you realize that $300,000 of equity could easily turn into at least $2,500 a month? And you're negative $500 a month. So that would actually put you in a $3,000 a month better position. And the funny thing is he came to me because he's like, yeah, I'm really worried about the debt I've taken on. I was like, the debt won't be an issue if you're cash flow positive. If it's more than paying those debts and then some. This debt doesn't even become a worry if you're doing it right. And that's the thing. He had net worth, but that net worth, that extra cash they had available wasn't kicking off real passive income for him. And so that's the thing I'm always looking for is, all right, where is it in the cash flow place? Because the real freedom comes from more cash flow. The more income you have coming in versus your expenses, the more options you have. And the more options you have means you have more freedom.
So you said to the woman who was working at FedEx and a nurse to stop putting the money into her 401k, and some snide remark, I think, about that crappy 401k. So
Mm-hmm.
that may be shocking to a lot of people to hear that because, then you said later, everybody kind of does what everybody is told to do. And that's why
Mm-hmm.
people put money in their 401k, because that's what we're told to do. And that's what I did until I fell into this infinite banking world. And actually, as a guest on all of these passive real estate shows, I started learning, and I'm like, gosh, I have to start walking my talk. And I took all my money out of the stock market and put it into these passive investment vehicles. But so someone who's just coming to that same, what did he just say? Comment? Why did you say that?
Yeah, it's funny because I 20 years ago, I started out as the traditional mainstream financial advisor, right? I started doing that. And then it was actually after about 3 or 4 years, I realized, wait a minute, this stuff doesn't work. People aren't becoming financially free even after decades of this advice, of investing in mutual funds for decades. Some people have been investing in their 401k since the 401k was an option. And they still weren't financially free. And we've been sold that forever, that, hey, you put into this for 30, 40 years, and then you can retire. You'll be free. And that's completely bull crap, like to make it edited for this show, right? Like it's total BS because the truth is the returns in the market aren't as high as what they say they are. Like even at now, the market's at all-time highs. And guess what? The average return for the last 30 years has been about 8.5%, not 12 like they proclaim, 8.5. That's the real yield of the stock market. That's before fees come out. That's before your taxes come out. That's the gross return. That's not the net pay you get, right? And then people say, yeah, but I get a match. It's 100% return. No, it's not. Because what happens, the longer you get that match, the less the return becomes. Because all that match does, even if you got a 100% match, right? All it does is that means the end number will just be double. Now, based on interest rates, right, the whole Rule 72, compounding interest and that kind of thing, all that means is that in the end, say you do earn 8% in the market, that means you only get about an extra 2 or 3% on top of it, which usually means that you might make like a 10 or 11% return average if you're lucky. And that's before they take out taxes and everything else. So here's the thing with the 401k, right, is that it's the commonplace. Like you said, it's the common thing. Ask yourself, what are common people, how are they financially right now? Are common people doing awesome financially? Are they free? Or are they still broke working paycheck to paycheck? Even if they have, and I'm not even talking about people that have extra money that they're saving and packing a lot of money away into those 401ks. They're max funding them, right? They're still paycheck to paycheck because if that job stops, they are now scrambling for work. They need money, right? That is what I mean. Like there's nobody that can actually retire with real income streams. That's the whole reason why you're trying to put money in a 401k is to get income streams, right? But that's not happening. You got to have at least 30 to 50 times the amount of money that you want to live on, you got to have in that account. So if you want 100,000 a year, you better dang well save up to at least $3 to $5 million in today's dollars. That's before inflation, right? Because 100,000 today was not like 100,000 when I was growing up. 100,000 a year was like, you're rich, right? It's like, well, $1 million home. My wife and I just bought a $1.6 million home. We were like, back when we were kids, if somebody had $1 million home, it'd have to have Mr. Belvedere with it, right? Like
Exactly.
it would be better than Who's the Boss, like it would be more wealthy than those people in Connecticut, right? It was like you had to be like somebody like was like wealthy with silver platters and stuff and servants. And now a $1.6 million home is like, cool, I can keep my family in there. That's great. That's not much. That's the perspective. So we think about the inflation, it's like a Dalmatian chasing a fire truck, right? It's always chasing it. So I showed somebody an example recently where even to have a $60,000 a year lifestyle, you got to save up almost $10 million in 40 years. 10 million. And the market returns aren't enough. You would have to save over 100,000 a year to do that. So my point is this, is that method has been proven over the last 30, 40 years. It still hasn't worked. What makes you think it's going to keep working for you, right? So, and on top of that, we were talking about franchises. Why invest in everybody else's company that you have no control over, that they don't even care about what your opinion is about what their company does? Why invest in all these other companies when you can invest in your own company, control your returns, and get a much better return on that? That's long
Yeah,
story
that's what
short.
I'm talking about, Chris.
Long story short, 401ks suck. Like they're just golden handcuffs. They keep your money in prison, and your money can do much better. Same thing. If someone wants 100,000 a year, you don't have to save up $3 or $5 million in a mutual fund. 100,000 a year with $1 million or $1.2 million, you can buy passive real estate investing where you do nothing and get paid that same income stream with like a quarter of the money. So it's all about leverage. It's all about using it differently. And once I realized that, that's why I had to quit being a financial advisor in 2006. I was like, wait a minute, this stuff is broken. It doesn't work. But I see that these people in real life, these people are financially free. What are they doing? They had two things in common: real estate and business. And sometimes both, right? Both of them pay them income streams to get them to be financially free. So why not go with where the proof is, not the stuff that's already been proven not to work already?
So when you're working with clients, Chris, are you leading mastermind groups? Do you sell coaching programs? How do people work with you?
Yeah, we do one-on-one coaching, consulting for those that we know we can at least double the return of whatever they pay us. That's the commitment we have. We have to make sure that we know we can double the return. And then we have also masterminds that are part of that as well. Later in the fall, we're actually coming out with more of a group coaching program, more for those that are either tire kickers or they're people that are saying, hey, I'm not quite ready for the one-on-one consulting, but I need something to get me started, get a good foundation. And so we are launching that in the fall.
And a lot of those people actually probably land on this YouTube channel because I think a lot of people, when they first come to the idea of breaking free from corporate America and building
hmm
income they own and control, they first think of a business, they end up at franchising, they start here and they
hmm
start to build their net worth, they start to build their free cash flow, and then they can probably have more confidence too to like go on to, well, what's next? How do I
Yeah,
really build this lifestyle where I'm not just exchanging my time for money?
that's right.
And so
It's
that could be
so
the
much
next
easier than people
progression.
think. That's the thing. Is like you just gotta often you just have to change that perspective, look at things very, very differently, and all of a sudden that's when the world opens up, right? That's when you
Well,
start
what's
to see
funny is
possibilities.
everybody thinks like that. It's just
Yeah,
that's not what we do in practical life, right? So
that's
we
right.
everybody that I meet, if I ask, what drives you to the idea of wanting to own a business? I mean,
hmm
every single person for 19 years says freedom, control,
Yep.
stability, security. Like the answers are always the same.
Always. That's why I got in business. I wanted to control my own destiny, right? My own time, my freedom, and the cool thing is, I love about people that are going in the entrepreneur path or the business owner path is that they're already to go that path. You already have to be somewhat of an independent thinker, right? You have to be somebody who thinks differently than the mainstream because the mainstream wouldn't tell you to go start a business. They would say, go work your little 9 to 5 like a little robot, right? And just do your thing and hope that the government will take care of you in the end because your 401k won't do enough for you. So you're begging for Social Security, right? That's the normal American way. But the real American way, the American dream that we all bought into, was to do something completely different, something that's outside the norm, where there actually is a potential and a real opportunity for success. And that's the thing that's beautiful.
If anybody listening to this wants to get in touch with you, Chris, how do they find you?
Two ways. You can either go to my website, moneyripples.com. You can find plenty of stuff and information on there, or you can even just follow my podcast, like you mentioned earlier, the Chris Miles Money Show, which I've got plenty of episodes you can choose from there too.
I love your episodes because they're like bite-sized. They're not like big,
Uh-huh.
hour-long commitments. Like that's the kind of podcast I like to listen to because it's just enough. You get what you want, and then if you want to reach out to that person, you do. You move on to the next show. Yeah,
That's right.
excellent. Yeah, and we'll put all of your contact information in the description below. I appreciate your time. I hope everybody who's listening will give this some thought. I know it's a paradigm shift, and sometimes it makes people angry, I think, when they first hear it, or frustrated or
Hmm.
question it. Like I know I did. And then when you start to get educated, you go, wow, like it's
Hmm.
like you the wool was over your eyes, and now you're like
Yeah.
seeing how it really is. And I sit for 19 years and say 90% of millionaires own their own business, but didn't really correlate it to the next step of building passive income that you're not waking up and earning every day. And then once you get into this world and you find all these people like Chris, and there's, that can help you and mentor you, you don't have to go it alone, just like in a franchise. There are people out there. So please absolutely reach out to Chris. Any final words before we end this podcast?
I For those of you listening, you're in the right place, right? Like there's hope, and there's definitely that potential for real freedom and real prosperity, and it happens by doing the very things we're talking about here today. Like if you just internalize that and then act upon it, man, your life could be drastically different than what those around you have always been.
Thank you so much for joining us today, Chris. If you've enjoyed this episode, please don't forget to like and subscribe. Until next time, I am Kim Daly, your daily coach.